Retirement. It's something we all think about, right? I mean, who doesn't want to kick back and enjoy life after years of hard work?
Absolutely. It's the dream.
Exactly. But figuring out how to actually make that dream a reality, well, that could be a little intimidating.
It definitely can be. There are so many options, and it's easy to get overwhelmed.
Totally agree. So today, we are diving into one specific option that might be part of the puzzle, the American Equity AssetShield 10 Fixed Index Annuity.
Interesting choice.
We got some great info from the folks over at Diversified Insurance Brokers. They really know their stuff.
They've been in the game for a while.
So what we are going to try and do today is figure out what this annuity is all about and whether it could be a good fit for someone planning their retirement. Sound good?
Let's do it.
Perfect.
Yeah.
First things first, the AssetShield 10 is offered by the American Equity Investment Life Insurance Company.
Right.
And it's categorized as a fixed index annuity. Now, before we go any further, can you give us a quick breakdown of what exactly that means?
Okay, so think of it like this. A fixed index annuity is kind of like a hybrid. It gives you the potential to earn interest based on the performance of a market index.
Like, say, the S&P 500.
Exactly. A basket of those big name companies. But here's the key difference. You're not directly investing in the stock market. So your money isn't actually subject to those wild swings you see in the market.
Ah, I see. So you get some potential for growth, but without the risk of losing your principal if the market takes a nosedive.
Exactly. You get the upside potential without the downside risk. Pretty appealing for folks looking for stability in retirement, wouldn't you say?
Definitely. Especially when you're relying on those savings to provide income during your golden years. You don't want to be sweating every time the market dips.
No, not at all.
Okay, so the AssetShield 10 specifically mentions linking to a few different indices. The BlackRock Adaptive U.S. Equity 7% Index, the BNPP Patriot Technology Index, and then there's the S&P 500 Dividend Aristocrats Daily Risk Control 5% Excess Return Index. Whoa, that's a mouthful.
It is, isn't it?
So why these specific indices? What's the thinking there?
Diversification. Spreading your risk. Think about it like a well-balanced meal.
Okay, I'm following you.
You wouldn't just eat one type of food all the time, right?
Yeah.
You want a variety for a healthy diet. Same idea here. By diversifying across different indices, you're not putting all your eggs in one basket.
Right, so if one index isn't doing so hot, another might be performing better and picking up the slack.
Exactly.
Makes sense. Now, there's always a trade-off, right? Wouldn't diversifying across so many indices limit the potential gains if one particular index skyrockets?
Well, that's the balance you have to consider. It's true that fixed index annuities typically offer more moderate growth potential compared to, let's say, directly investing in the stock market.
Yeah.
It really comes down to your individual risk tolerance and what you're hoping to achieve in retirement.
Right, right. So let's talk about something called the performance rate rider. It's also called a PRR. What exactly is that and how does it work?
Think of a rider as an optional add-on. It's like choosing to get the sunroof or the heated seats in your car.
Okay, I like where you're going with this.
Yeah, a nice bonus feature, but it's going to cost you extra. So in this case, the performance rate rider gives you the potential for higher returns on your investment by offering what's called a higher cap and participation rate.
All right, let's unpack that a little. Cap rate, participation rate.
Yeah.
What exactly do those terms mean?
Okay, picture a delicious pie. And this pie, it represents all the potential market gains that are out there.
Got it. So we all want a piece of that pie.
Exactly. Now, the participation rate is like deciding how much of that pie you get to share in. The higher your participation rate, the bigger your slice.
I see. So more pie for me. But what about the cap rate?
The cap rate, that's like putting a limit on how big your slice can be. Even if the pie grows massive, your slice will only be so big.
So even if things go amazingly well, there's a ceiling on how much you can earn.
Precisely. It's another way these annuities balance the risk and reward.
Interesting. So moving on, I see this annuity also offers penalty-free withdrawals of up to 10% each year after the first year. Why is that something worth highlighting?
That's all about liquidity. It's about having access to your money when you need it. Retirement isn't always predictable. Things happen. Sometimes unexpected expenses pop up.
Like what? Give me an example.
Well, imagine your roof suddenly needs replacing, or maybe a family member needs some financial help. Having the flexibility to take out up to 10% without any penalty, that can be a huge relief.
That makes a lot of sense,
Yeah.
especially when you consider that people are living longer these days. Unexpected healthcare costs, home repairs. These things can really throw a wrench in your retirement plans if you're not prepared.
Absolutely.
Okay, so on top of that 10% withdrawal feature, there's also something called the Enhanced Benefit Rider.
Yep.
This one seems pretty interesting. What's the deal with that?
This rider offers some valuable coverage for nursing care and terminal illness. And get this, for people under 75, it's included at no extra cost.
Wow, that's huge, especially with the cost of long-term care going through the roof these days. It's got to give people some peace of mind knowing they have that safety net.
It definitely can.
And then, to top it all off, there's the legacy benefit.
Right.
This one ensures that your beneficiaries receive the full value of your contract without any surrender charges if something happens to you.
That's right.
So it's not just about protecting your own financial well-being in retirement, but also ensuring that your loved ones are taken care of.
Exactly.
Of course, we always have to remind everyone, this is just one annuity option out of many, and it's not going to be the perfect fit for everyone.
Definitely.
That's why it's so great that our friends at Diversified Insurance Brokers work with lots of different carriers.
Right.
They can help people find the best solution for their specific needs.
Absolutely. There's no one-size-fits-all in the world of retirement planning. Everyone's situation is unique.
Which leads us to a question for our listeners out there. If you were building your ideal retirement plan, what would be your non-negotiables? What are the must-have features that would make you feel confident and secure?
Yeah, it's something worth thinking about. Consider your risk tolerance, your dreams for retirement, and what truly matters most to you.
We hope this deep dive into the American Equity AssetShield 10 has given you some food for thought. Annuities can be a powerful tool for building a solid retirement plan. It's all about finding that perfect fit for your own unique goals and needs. Thanks for listening.